Good morning, everybody in YouTube world. Good morning. It's December 16th. This is Signet streaming with the Bullish Bears. We'll be firing up the room here in just a few moments. Hopefully, everybody had a good weekend. Market is in pretty decent shape, all things considered. The China GDP and job numbers were really good this morning. Well, last night, actually. And of course, this just helps the market. This morning, the futures have really been led by the Russell. The small caps are the bird dog, and the Dow has really been kind of holding this back. We would expect that to be from Boeing and perhaps some of the negative news from any of the other quarters of the Dow 30. But it does seem to finally be coming around. If we look at the overnight session, the Dow was just really holding us back through the whole thing. We were range bound most of the night, and then the S&P, the Russell, and the Nasdaq all broke that range and started running, but the Dow was just held back. So once we get that participation coming in this morning, this should be a fairly nice trading day. One of the things that we want to look for this morning is a gap fill. Now, we're up 17 on the S&P, so a gap fill isn't necessarily a given. It's moved far enough away now that we wouldn't anticipate filling that gap, and instead we would just look for a continuation of this rally higher. But it always has to be a part of our focus so that if the market does decide to close that gap, that we're ready for it. Having a thesis one direction or another doesn't take much more than just a little bit of perspective. So a few names on the list from the on the swing trade list that Lucian had built over the weekend: AG, GGAL, XLU. Those three are on the swing list. I added Boeing, which had some news. Facebook had news. JP Morgan, Goldman Sachs, Amazon, Twitter, Tesla. These aren't the only ones that I'm interested in trading. They're just the ones we want to start with. One of the things that I notice people struggle with is finding a trade. And yet when I ask them what it is that they're looking at, they say, well, I'm not looking at anything yet. I'm waiting for somebody to point out what is moving, and then I'll go look at it. That really doesn't work. You're going to spend all your time chasing. So unless you have some sort of alert service like black box stocks or trade ideas or some kind of service pointing trades out to you, you're going to continuously be chasing everything out there. And what you want to do instead is develop a thesis, develop a theory on the day, and then decide what sector that you're going to trade. From that sector, pick out your markets, perhaps use relative strength or some other criteria to determine which one of those you want to trade, and then get your setup and pull the trigger. Me, I like the financial sector. It offers a wide range of possibility from digital services like Paycom and PayPal to credit services like
Order
Discover
filled.
Card, American Express, and Master and Visa, to the banking sector like BK Mellon, Goldman Sachs, Wells Fargo, and then into Treasury and bonds and interest rates. All of that from one sector. That really gives me an opportunity to measure, compare, look for confluence, and trust me when I say that when all of the futures or all of the finance moves together, you can really hammer down some great trades, and it doesn't take that much effort to start breaking out my charts the way I want. So if you're struggling to find trades and you feel like you're always chasing, dial back what it is that you're looking at. Take a more broad perspective to begin your day. Which sector are you interested in? Which sector really seems to be driving the market that morning or that day? And then go in and trade industries or products that match that thesis. Lucian also did build a day trade list. and I added just a few markets to it. So here is the day trade list. And of course, this was built over the weekend, and it does not take into account anything that might have already gapped up this morning, any gap and go lists or anything like that, which you can most often find on your broker's website. So if you go to TD Ameritrade or Fidelity or E-Trade, they're going to have a list of gappers. They're going to have a list of things that have been upgraded, downgraded, analyst recommendations, target adjustments. All of those things can definitely offer trade ideas as well. And then we've got products that have earnings today and through the week. So use the tools that are at your advantage. INFN gapped from $7 to $9. This could be a really great fade opportunity today, or just could continue to rally like a monster. DVAX made a strong move last Friday into the close. Two different ways to trade that would be to look for weakness and sell into that strength, or look for a continuation of the trade. ASNA, range-bound market that gapped up, not a large gap. Of course, this is a penny stock, something to be very cautious of. They're not my go-to products to trade, but people certainly do love them. So we're going to keep our eye on that day trade list and perhaps adjust that a little bit as we get going. Every single sector into the close last week was strong. These do not trade 24 hours a day, so we need to watch them to get a little bit of perspective this morning, change our thesis depending on which one of those is moving. If you haven't seen me stream yet, what we're going to do when the bell rings is give the market a good 5 to 10 minutes, what we call price discovery. Now, one of the things that I like to do is look at the AD on the day. These are detachable, so you can actually watch all four at once. But I bring up the S&P 100, and this is going to show me how many of these 100 are moving up, how many of these 100 are moving down, and how much capital is coming into the market versus going out of the market. The reason that this is important is because we can anticipate divergence turning into a trade opportunity. So, for an example, if 60 are moving down, 40 are moving up, but the capital is 3 to 1 coming in than going out, we would be looking for a market to build a base, to form a bottom, and then to take a long position from that. A lot of times, a bear flag will fail to be a bear flag and will actually be a base for a market to rally up off of a low. So determining if something is a actual bear flag or if it is a trade opportunity to go long can be identified from the capital flow. And this is a really great tool to use in the first 30 to 45 minutes of the day. After that, you really don't get that divergence opportunity. So you can do this with all four markets. Bring up the S&P 100, bring up the Nasdaq 100, the Dow 30, and then the Russell 1000. And all four of those together, you can watch for confluence within the four markets and time your entry even better. All right. So China did have good job numbers. There was some weakness when London opened. A little bit of volatility after Tokyo closed. Hong Kong slid into their extended trading hours. The European PMI came out, gave us this little bit of a rally, and then I don't believe that we had these economic events. Some of these indicators get the day right, but oftentimes it's one day out of the month and not every Monday or every Thursday, and it's hard to tell these indicators on Thinkorswim to only do one Thursday out of the month. My coding is good, but not that good, not yet. So I seen someone asking about Facebook. Go take a quick peek at that. Oh my goodness, what a mess. Let's just remove all those. So I've already got some previous lines here. It's coming back down to this support, has not yet managed to get there. Last week's trading session. If we look at this in the perspective of the Fibonacci, it broke the 786, the 618 comes really close to that orange line. That would be the line in the sand. If you're looking for a trade opportunity here, it needs to validate this move back down. When it had changed lanes, which is a really good way of thinking about where price was. It was here, it had a breakout, it came down and tested that range, seemed to hold, then this economic news came out and dumped it. So this price range or price lane has failed, and it's now looking for a new lane, and it needs to validate that. We would look for this to find support here at the orange line, and really looking at support and resistance is easier done looking at support and resistance zones. All of that area here should be a buy zone if this is going to hold the line. All right, so what we would be looking for here, you can see the wick from Friday that it found a low. The buyers came in and were willing to pick it back up, and that 194 seems to be an area of agreement, at least Friday, for the new price range. We need to see this maintain its position. With a lot of these groups that get social attention, and this has been in the news through all kinds of economic circles, from Bloomberg to politics to stock twists. Facebook has been all over the news. The participation has been fairly decent, but it really needs to validate these levels. Until it does, we're all just waiting for price discovery. There's the 50, and it closed on that Friday. We'd be looking for a break there to go short. And this is what I call an institutional trade. Everybody watches the 50 and the 200. Some might use the simple, some might use the exponential, but either way, institutional traders, algorithms, hedge fund managers, retail traders, everybody watches the 50 and the 200. So a failure there will instigate everybody wanting to take this thing short. Well, Mark, it sounds like you have a trade plan, which is good. I'm really glad to hear that you actually have a plan. A lot of people don't, which surprises me to no end. And then they say that I can't figure out why I keep losing. Well, because they don't have a plan. So you're a really great example of how to do it right. So far, it looks like your plan is holding perfectly steady. This broke that angular support, not from any technical reason, but just because of the news. And if you've been able to hammer it from the 205, then you're killing it, and you have a hell of a trade. I would be cautious of a bounce on the 50 today, but got to really watch, see what we're going to get out of the pre-market here at all. We have no real concern at this point. What we want to watch for is this pivot point from Friday. that's going to be a key level. If it breaks that pivot point and closes above it, I would be very concerned about a recovery. Until it breaks that level, I would hold to my original thesis. And since you got in at such a distance, you have room to let this thing breathe. So you don't necessarily have to stay hair trigger to bail out of this trade. Now, one thing that you can do is you can apply the daily moving averages on your intraday chart. So if you go in and you just type the daily, you can add the daily SMA. So you can add a 50 and a 200 from your daily and your weekly, actually, from both of those, so that you can see where price actually interacts on the daily, on the intraday, with those daily moving averages. You can see this is the daily 50, and this is the daily 200 way down here. The 200 is not going to be anything that we need to concern ourselves with, but we can use that since it's so far away. We can check the 5-period moving average, which is a really great heads up. A market underneath the daily 5-period is a great short opportunity, and a market above the daily 5-period is a long opportunity. You can see here the market came down and tested the 5, held through the day, and was a rally opportunity through the next day in these bounce moves. Here, when it broke the 5, it was a short opportunity and everybody hammered it down. So today, we would be looking for that 5-period, asking the question, where is it? Because it's not plotted yet. Where is that 5-period? Are we above it? Are we underneath it? We should still be underneath it. And we can look for contact with that and then initiate a new trade, add to your position, perhaps take some risk off, paying yourself, and then add to your position. There's a lot of ways to deal with a trade rather than just sitting in it and not doing anything. So something worth thinking about there. Trade management offers all kinds of opportunities. Now, if everybody will give me just a moment, I need to fire up the live stream in the Bullish Bears community. And then I have to do an audio check and all of that great stuff. So excuse me for just a minute while I take care of some business. Good morning, everybody. Let's get a sound check, please. No, I can see that the audio isn't kicking in. I've got to reset the bridge. Coffee. Good morning, everybody. Let me get a sound check, please, in the Bullish Bears trade room. All right. Thank you, everybody. Thank you. I appreciate that. Was just taking a little bit of analysis on Facebook. Lucian did some work over the weekend building us a watch list for some day trades and some swing trades. We can certainly add that to our analysis. I did add onto his list a little bit. SENS, USO, XSteel, HEXO, which had earnings. And from his list, CEPU, IN, FN, ARC, DVAX. So we've got quite a few products to play with. The penny stocks are not my favorite, but they certainly do offer a lot of trade opportunities. We're going to be watching the AD at the bell, looking for some divergence in the marketplace. I'm not expecting this market to try to close the gap but it depends on which market we're talking about. So when we step out here to the futures grid, notice that the S&P is still up 17, the Nasdaq is up 52, and the Russell is up 12.5-ish. That's a pretty wide gap that I would not anticipate seeing filled. Even the Dow is up 71, and it's been a dog most of the night. China had really good numbers. Their GDP and job numbers came out last night and were really good. And a lot of overseas news has been relatively decent. I just don't see the possibility that it's going to come back down all the way and close that gap. So what we're looking for instead is a trend day today, continuing up from here. But we want to see in Market Watch on the Visualize tab with the S&P 100, we want to see advancing issues above 80, and we want to see 2-to-1 money flow at least jumping out the gate. A little bit of perspective. Now, if you didn't catch earlier when I was in the room, I was talking about trading different markets and how I hear all the time from people that they just can't find a trade, which absolutely blows my mind. I never have a problem finding something to trade. The problem is I never have enough capital to trade everything I find. If you don't have a trade alert service, something like black box stocks or trade ideas or some kind of alert service, then you're going to need to find something to trade. One of the things you can do is go in just to the Dow 30 and spend 20 minutes setting alerts on products. Look for things that are building a base. Look for things that are testing the top of their range, like Tesla here is back up testing the top of this pivot area. Set alert on those products, and that way you don't have to sit there trying to stare at 40 different markets first thing in the morning. I like to break things down into sectors. Finance is something that I really enjoy trading. It offers bonds, interest rates, lending institutions, banks, credit cards. It's got all of these different sectors that I can break out. And then from them sectors, I can look for confluence, divergence, trade opportunities. So that's my niche. That's what I really like to trade. Find that thing for you, whatever that thing is. Maybe you like tech, so you would build a tech list. That used to be called the FANGs, right? And you'd have Microsoft, Amazon, Google, Netflix. Build a list that gives you something to trade. And that way you're not sitting there looking at everything on the market. Trust me when I tell you, if you pick even half of the Dow 30 and you watch them, you will get a trade opportunity from those every day. So instead of trying to chase after something that could potentially have already set up and given you a signal that you missed, you could instead be waiting, having a trade opportunity present right before your eyes. Oh, yeah, excuse me just a moment, needed some coffee. For all of you people who are around the world and don't live in the United States, I've been working on getting the material together, but if you get a tax stamp in the United States so that Uncle Sam can make money from your trades, you'll be able to trade like an American. Now, I don't have all the material put together, so I can't point you right to the site. But if you do some diligence on your own, start with Google and start asking the question, how can I get a tax stamp? How can I trade in America? Start asking those questions, tightening up your search through Google. Perhaps you'll find it before I actually get a video made on it. The United States government is greedy. It wants money. So if you can find a way to get a tax stamp, it will happily tax you and let you participate in our marketplace. So if you beat me to it, great. You can come back and share with the rest of us what you found and where you found it, adding it to the comments here later on. We would all be appreciative. With my schoolwork, I have been tied up for the last 7 weeks and have not gotten around to finishing up that. But man, I really want to do that. I get asked all the time from people that are overseas or just out of the country, how can I trade in America? And you really can. I just haven't gotten the material together yet. You might have to pay a lot of taxes, right? But I've had people that have $70,000 accounts and they're overseas and they're struggling to get into our market. You know, everything's a trade-off. You might have to pay a lot more taxes than anybody else. You might. I don't know. But if your option is to trade in America or not trade in America, and you really want to, you'll find a way. I used to trade with the offshore broker CMEG just to be able to day trade. It cost me $80 to move money out there. It cost me $80 to move money back. And I was willing to do that because I really wanted to day trade. It got to the point where I was able to just swap products. I no longer needed that offshore platform, and I don't have it anymore. But at the time, it was the only thing available. So, as much as I didn't like it, I did it anyways. So it all comes down to what your goal is and how much you're willing to pay. Remember that analyst upgrades, analyst downgrades, price targets, economic news, all of those things can be found on your broker. So if you go to TD Ameritrade or E-Trade, Fidelity, you will see those listed out for you. It's a great opportunity to find products to trade. And it's free if you're already a member of that company, right? And if you're on TD Ameritrade, if you're on Thinkorswim, you can go to TD Ameritrade. I've got Fidelity, I've got E-Trade, I've got TD Ameritrade, and all of them offer just a little bit of something that I like. And I've noticed that so many people are not taking advantage of that free content, and including they write articles, they give you trade ideas, mix a little bit of fundamental analysis with technical analysis. You can get a lot from those, and it's free because you're already a client. TD Ameritrade is toss, yes, but all of it was bought by Charles Schwab last month. So TD Ameritrade kind of still exists, but they've got a daddy now. Who's your daddy? ¿Quieres tu papá? Bye. So some of the work that I was doing over the weekend was work trying to develop videos on hedge funds and bonds, kind of trying to give people a better perspective of what these banks are doing, these trading firms that are out there that are using your money, borrowing money, and then getting loans for more money, and then trading with that money into the marketplace. Those hedge funds and trading firms, they all have to get money from somewhere. So going to be coming out with some videos that are going to help you get a better perspective of what's going on in the marketplace. If you see the kind of news that comes out on Sundays where they're pricing the different foreign currencies and it's estimated at one value, it comes out at another value, and then you see the market shake or move because of those, you can anticipate that kind of news coming out. Gives you trade opportunities. Bank of New York Mellon is a really great product to trade. This has replaced me trading Bank of America. BAC is something I used to trade all the time. Now I spend much more time trading Bank of New York Mellon than I do Bank of America. If you trade Bank of America because it's a cheaper product, take a look at this one. You might find yourself interested in it. It's very liquid. It offers you trade opportunities all day long, and it correlates with other markets, which means it gives you more than one thing to look at when you're trading. I had a shout out for Apple. Remember, Apple is SPY, SPY is Apple. If you want to review Apple, go review SPY. Are you bullish in SPY? Then you're bullish in Apple. The only time that you don't put those two together in your mind is if Apple had some kind of news or economic event that separated it from SPY. So anytime, anytime you think Apple, think SPY. Check the news for Apple. Nothing is, there it is. I was going to say nothing is populating. I was about to think that TD Ameritrade was dropping the ball. So it had some news come out in the last 30 minutes. Apple Arcade is now available. So I don't see any negative news popping up in here. In that case, Apple is SPY. SPY is bullish. The whole market is bullish unless something has a reason not to be bullish. So that handles Apple. Alibaba. Check for news on Alibaba. 5 minutes ago, it was connected with this media here. Cisco wins injunction, and that's not new news. I was reading this earlier this morning, so we could say that not seeing anything really negative here. And you can see that in the pre-market, it's continued to march itself up. There's the bell. We'd be looking for a little bit of price discovery this morning. A fade back down to the 50 to support before continuing its move up would not be too big of a surprise. Need to see this hold the line. We step out into the larger time frame. This thing's been a beast. It's continued its move up. It's got the overhead fib at the 211. It's really extended, but so far maintaining its run. It is a long ways away from its moving averages, and this one little pullback here does not give me a lot of confidence that it has consolidated effectively enough to continue a rally higher without pausing. Remember, it doesn't have to pause, but we anticipate that a market would pause, consolidate, gain a little bit of momentum before continuing its move up. Right now, the main thing on Alibaba is yesterday's high, yesterday's close, and you can see that it's running strong right towards that price structure. So you've got some overhead resistance in your way. A break above that should take you towards that Fibonacci level. Got a call out on HD. Home Depot. You can see the exchanges reported trades here after the close. Throughout the day, off exchanges took orders, and then at the end of the day, they needed to report those orders. That's what this is. This gapped in the pre-market, came down to close the gap, making a break now above that pre-market. Check your fade, look for your trade opportunity. Creed's given a shout out. He pimped it in the S&P Mini, the ES futures, for 1.5 points. Creed, pimping ain't easy, Bubba. Pimping ain't easy. And now he's watching for a Tesla play. Strong move in Tesla. Look at that 365 to provide some support. It's the only thing there. Step into the higher time frame. You can see this large cup. There's the handle, and then the break out of the handle. It's also a really ugly bull flag. So there's the bull pole. And a flag is supposed to have multiple points. This doesn't, which is why it's a really ugly flag. We'd need to see 2 points on the top, 2 points on the bottom, and that would, quote, be the flag. It doesn't have that. But it is nice, clean, stair-stepping action. Faded back to the daily 5-period moving average. Bounced and rallied off of that. Strong move up. So let's jump over to Market Watch and take a look. We got 95.5 and 2-to-1 money flow. It's not quite 2-to-1, maybe 2/3 money flow. But the negative money flow is increasing and closing this gap. It's a little bit of concern, not too much. Jump over and look at the Dow. We've got 29 out of 30 moving up. Boeing is the weight around the neck of the Dow. And you've got bearish divergence here. More money is going out of the Dow than coming into the Dow. So even though 29 are going up and only 1 is going down, there is more money leaving the Dow than coming into the Dow. That is important to recognize because that is the weakness presenting in the marketplace. Had a question about Roku. Structured support failed. Trade opportunity has been presented. You've got multiple levels for testing below. The 127 would be a big area of concern in the near term. You've got a pivot point there at the 129.5. And remember, all round numbers, all quarters, 50s, halves, all of those become areas of temporary support, which we would look for it to break through. This has been picture perfect for a trade opportunity. We go into the 5-minute. You can see it broke yesterday's low, which offered a trade trigger to go short. If you had a trade plan, that would have been the trigger in your plan, and you would already be in the trade. You would have already been out of the trade because you would have made well over $1 in that move. You missed it. Now it looks to be rallying up, but the rally up, more than likely, is a continuation of the Fibonacci move, right? So this move up should present to the Fibonacci number where it finds some support in this move, right? Support isn't the word, where it finds, the word I'm looking for. Think about a market that rallies and then pulls back, right, to gain some structure. So that's the word I'm looking for. This move down, set the low a day. It's pulling back to find some structure to consolidate its position before moving lower, validating this new low and this new direction that it's going. This area here from last Friday into the close is what it's validating. Remember, Tom Busby talks about a market that breaks out and then comes back to the breakout to validate the move. So this is doing the same thing. If it breaks and runs through this, then we're no longer looking at a continuation from last week, and we would be looking for a change in market sentiment. At the moment, we don't have that. Not yet. Had a question on Square. This has been a range-bound market for multiple days. You can see the 200 daily moving average overhead. It just broke through the 5-period daily. A 5-period daily is a really great trigger to go long or to go short. So seeing a break above the 5 offers you a trade opportunity to perhaps put on a long position. But notice Friday, it broke above the 5. It moved a good 20 cents, hit that resistance, fell through, and crashed, right? So just because this broke above the 5 doesn't immediately mean you run out there and jump into a long position. This has had multiple validations, multiple checks of that $66 mark. Test and fail, test and fail, test and fail again and again and again. So that is the area that should be your major concern. Notice that when it came down this morning, the daily 50, which is what that orange line is right there, the daily 50 was where it paused. It stopped. It's moved down. Those daily moving averages really do offer you some opportunity to anticipate what a market's going to do. So if you're not yet in a trade and you're looking at this, it needs to break that $66 range and validate that range. Remember what Tom Busby talks about. If it does break this 66, you would want to see it come up and make contact with this 200, perhaps pull back to the 66, validate that as the support, and then gain strength to run again at the 200 and make a break through it. So you've got two levels over your head if you're looking to go long. There is no reason to look short in this at all yet. Tesla is having a breakout moment. I would be interested in seeing a breakout fake out. You can see all of these opportunities where it broke and could not hold. So I would really be interested in taking a short position by putting a credit spread up above that $70 range for a very short-term trade. Perhaps Friday expiration would be a good opportunity. I wouldn't try to bet against Tesla. This thing is very volatile and can rip your face off. Bloomberg has called it an account killer more than once, and that should get your attention. But with these multiple levels of test and fail, test and fail, test and fail, putting on a small position with a credit spread to limit your risk, using Friday expiration for your trade, wouldn't be that bad of an idea. Looking at the expected move for the week, that 369.98, pretty much that 370 range that I was just talking about, would be a great spot to look to fade this thing. I'm not looking at a strike, but as I just said, this 370 would be a great spot for your anchor. Build your trade from there. Notice that it does have an expected move of a couple dollars. So if we go in and we look at Tesla, it's got an expected move of $13.75 for the week. So it's a very volatile product. It's also in backwardation. Notice that the front implied volatility is higher than the back implied volatility. It's inverted. We got Uber unusual call sweep activity. 4,444 December 20, 30 and a half call strike opened for 25 cents a piece. That comes up to $111,000. Yeah. Somebody's happy about Uber. Wow, that's impressive numbers. Brady, you're looking at something that I love to look at. Finance. So Brady gave a call out on Visa. One of the things that I love to do is put together a flex grid or a grid and put nothing but financial markets in it. So Visa, MasterCard, Discover Card, um, line them up. And then in the next row, perhaps banking or financial lending on the digital side, like Paycom, Paycor, PayPal, and look for confluence or disagreement in those markets for a trade opportunity. We need to see Amazon hold the line, and I would be looking to take trade opportunities not in Amazon, but after Amazon rallies off that 60. It's an institutional market. Everybody watches. So going in and watching Amazon for the reversal on the day offers you an opportunity to trade something else on the day. That would be your trade trigger, looking for this to make its move up. If it continues this move lower, that should give everybody pause in your positions if you're trading the Qs and IWM and SPY. It has been range bound. You got this really ugly cup. There's the handle. The rally up off the handle, but a failure to fulfill the target from the cup and handle. We can use our linear regression tool and notice that the market is getting flatter and flatter. The market participation from the institutional traders in this is a little concerning. The opportunity is still there. I would not look to trade Amazon though. I would use this to trade something else. Let this be my trigger or my warning. So with a market that we've had this morning where everything just started moving sideways at the bell, we really got to ask, where is our market getting its mojo? Look at the sectors. Healthcare ripped to the upside at the bell, starting to form that bull flag, matched with materials, matched with what else? That's really it. The rest of these are presenting a lot of weakness. XLI, a lot of weakness here. XLP, consumer discretionary from both sides, the frivolous and the consumer, are both very weak. Utilities barely holding the line. So looking at the overall market, notice tech, it's really struggling. So a lot of weakness in tech. Those three sectors are all we have. Four, if you count energy. Energy seems to be doing pretty decent this morning. It's not bad. More strength coming in. So that's it. 4 out of 9. And the XLI is a major market that gets overlooked a lot. There's nothing sexy in it. It's got a lot of boring markets. Everybody just overlooks it a lot, yet it's very critical to carrying a market forward. Without XLI, this market will not rally. So I really don't have so many windows open. If you notice, I'm in one and I have two windows. That's it. This one, which I don't need, and the rest is all from one thinkorswim window. I just jump from my pairs trader to my active trader to my futures trader. And then from the charts, I can jump from the one chart that we're looking at over to the flex grid that I have predefined. So, nope. I do have a really nice computer, but you don't need one. You just need to be able to get comfortable with thinkorswim and set it up in a way that is comfortable for you. So there's our rally up off of the low on Amazon. We can see that sector start to rally, hopefully start to bring our market around. The bonds really gave up this morning. So let's see, what do we have? The Dow, the Nasdaq, and the S&P. Every single one of these is moving differently. The S&P and the Dow each formed this cup and had a break above it. Well, the ES failed to break above it, but the Dow made it. The Nasdaq ripped with hardly forming a cup at all, and the Russell does what the Russell normally does, and it went sideways. No surprise there. So we need to see some confluence. We need to see some agreement in these markets. Once they start moving in sync, we can really start to form some trade opportunities. This is cumulative tick. We want to see all four markets move in sync, and notice that there are no dots forming sync yet. The green one that we're looking at here still has 1 minute left. It's got 20 seconds left before that candle forms, and then this will either be green or not. The white line that you've seen on these charts is the linear regression tool. You need to be very careful with that indicator because it actually counts how many days you're presenting in your chart. You want to stay consistent with that. So if you set a 5-day, 5-minute, and you put that indicator on it, it will be different than a 3-day, 5-minute. To stay consistent, use it on the same time frame all the time. So if you want it on a daily 1 year, use it on a daily 1 year. Don't use it on a daily 6 month. You use it by looking at what it's doing. It's pointing down, it's pointing up, pointing sideways. Literally just like that. A market wants to maintain the mean. It wants to, we're looking for it to come back to the center all the time. So if it becomes stretched too far away from the mean, we look for it to regress. Linear regression, we're looking for it to come back to the mean. So you can identify trend, and then you can identify if a market is near the mean or near the average or not. If it's not, is there an opportunity to take a trade back to the mean? The Nasdaq broke above that 8600. That's a roundie. It's a critical level in the Nasdaq. It did not maintain above the roundie, so we need to see it retest and hold above the roundie. Failure here, at the very least, would look for a trade opportunity back down below the 96. I don't anticipate failure there, but need to see that strong close above the roundie. Well, let's look at Tesla from a Fibonacci standpoint. If we measure it off of the consolidated price action in Friday's trade activity, we've got the 786 around that 367 flat range. That's quite a distance away from where it is right now. You start stepping into the smaller time frame, you could look for some consolidated pullback to that 786. Call it the 386 and a quarter. Maybe the 389, excuse me, 369. And that's if it presents that much weakness. Here on the 2-minute, if we look for, quote, less weakness, 369.25 would be the 786. It is up $11, $11.50 on the day. It's up over 3.25%. You got to recognize that this thing, while it has no rules and it could run all the way to the moon, at some point it needs to pull back, right? So even though we say, you know, it doesn't have to keep going, it doesn't have to keep going, it can keep going. If you're looking to day trade this thing, you really got to ask, is there enough left in there for me to get something out of it? There might be, but probability says that it's made most of its move already. So instead of looking for a pullback to go long on a day trade, which could offer you a little bit of profit, it really could. I mean, this thing could go all the way to 375 today if it wanted to. No rules says that it can't. You really got to ask, what's the likelihood that it is going to make such a move today? We come out here onto the daily chart. Look at the ATR. Now, we could turn on an indicator and geek out on it. Just look at the candle size. In the last X amount of candles, is this one bigger than all of these? This one stands out as a bigger candle, and believe it or not, this one stands out as being almost equal in size. So in the last 2 weeks, this has made a really big move. And I don't need an indicator to tell me that. I can just look at the candles. Could this continue higher today? Yes. Is it likely to continue another $5? Probably not. And again, from my perspective, I'd rather short this thing with a credit spread, meaning I would rather jump in front of a train and put a credit spread up here, drawing a line in the sand saying I don't think Tesla's going to go higher than this before Friday. And even using the weekly expected move, we can see that even though it's made its pretty decent move, when a market hits the edge of its expected move, the trade is to take it the other direction. You can see it hit it here, and it came back inside. Now, granted, it continued to run, but you still had a trade opportunity. Here, it very nearly hit the edge. Here, it very nearly hit the edge. Do you see this repeated? Here, it just ran right through it, right? Because there's no 100% anything. But more often than not, when a market has made that move, what does it do? Reaches the edge, rallies out. Of course, I mean, look at these. Some of these runs are just non-stop, right? Like a boulder down a hill. Nothing was standing in the way of that thing moving. Got a shout out from Creed. He's taking the ES short again. Check on everybody over there in the YouTube world. The name of that bank stock, Charles, if you're still there, is BK Mellon. It's BK. Thanks, Mark. I just noticed you'd answered that for me. Appreciate that. So when it comes to putting on a trade, guys, you don't have to run out and run all these scans and crawl through the marketplace looking for trade ideas. You can really just start with the major industries, the major indexes, the major sectors. Start to break things down in a way that offers you something to trade. If you set your alerts, you get a trigger, you get a signal, you can go and get into the market, and you're not chasing something anymore. Pullback in Goldman Sachs. Oh, what a move. So last week it had the breakout. It came back down to validate the range, and it's now making its move up from there. Like we talk about all the time, a market makes a breakout, comes back and checks to make sure, validates the range, and then continues its move higher. Apple continuing to move upward like a beast. A little bit of pullback in that. Kind of what we would expect since we had a pullback in the indexes as well. Take a look at the sectors again. See if we have any change of heart or change of sentiment. The bonds have leveled out off a little bit. The VIX is still weak, down 4%. We still do not have confluence in the marketplace, so no market sync between the four markets. Looks like the Russell still presenting a lot of weakness. Got a bull flag in XLB, XLF, and one forming on XLY. We've got a crossover in the market sync. So if you've never heard me talk about this indicator before, one of the things that you can do that can present a heads up in the market is watch the Russell on this thing. If you see the Russell cross directly through two other indexes like this, it's a warning, a heads up. This is concerning. This should get your attention. If you're in a trade in the futures or in SPY, QQQ, IWM, in a day trade, perhaps take some risk out of the trade, get paid, pull some profits off, and prepare for something. This is a really big heads up. So Maria is asking about Boeing, which was back in the news again this morning. So we can jump over to live news on Boeing. Yeah, it's weighing the idea of halting the 737 MAX output. And of course, like what normally happens when a market gets bad news, it's actually some kind of news which resolves the uncertainty, and then a market actually rallies out of that news. When I was a newer trader, that used to confound me to no end. Why there was bad news in a market and it would rally? Well, because it was resolution of some kind of news, some kind of situation, and it resolved And sometimes the bad news wasn't, quote, as bad as what they had anticipated it was going to be. A really great example of that was the chemical company that got sued recently, and it was, quote, only a couple billion instead of a higher number of billions. So people were happy about it. With Boeing, you're asking about a vertical at the 315 selling the 310. That doesn't make a lot of sense. Which time frame are you looking? Oh, January expiration. Well, we got 3 of those, 4 of those. Monthly, it seems like from your post. So from the monthly, and you're talking about buying the 315 and selling the 310. You didn't say calls or puts, so I'm just trying to reconstruct your trade here. All right, so you're talking about this trade here. Yep, it does say put vertical. Sorry, Maria. Got too many charts. Buy the 315. Sell the 310. This is a bad trade idea. The reason that this is a bad trade idea is because you're building a debit spread out of the money, which means the goalpost for you to break even is quite a ways over your head. You want to make money dollar for dollar as the market moves. So if this moves $5, you actually participate in some of the gains, right? If you build it too far over the head, if it moves $5, you might make 50 cents. If you use different strikes and it moves $5, you make maybe $3 out of the 5. Right? So we don't want to build debit spreads out of the money unless we've got a really good reason to do it. I used to say don't ever do it, but people don't want to listen to that. So there actually is a time to do that, a time and a place for everything, right? And maybe you're thinking, well, it's all I can afford. If it's all you can afford, you don't want to put the trade on. Don't trade just what you can afford. Trade the appropriate strikes. These aren't what I would consider the appropriate strikes. Can you make money in this trade? Yes. You see that break even way down here at the 314.10? If price gets beyond that and time goes by, you'll make money until expiration, right? It shows that a debit spread actually is a premium trade and that time is on your side if you get past this break even. Can you make money on it in the next week? Yes, if you get a big enough move. So let's map this out. This is how far it's expected to move between now and expiration. Just this distance. So if it moves only that far, how much money could you make? Today, $62. By tomorrow, only $55. And we're talking about this gold line right here, the edge of its expected move. Every day that goes by, you can see that now, by December 20th, if it made that move, you could make 26 bucks, 25 bucks. So what about all the way down to 320? If price goes all the way down there by December 20th, how much money would you make? $100 if it did that by the 20th. That would be the last day that you could trade it. That ain't true at all. The gray threw me off there. So we need to change this to January 18. That's better. For some reason, it didn't auto do that like it's supposed to. So there's the expected move between now and Jan 17. One thing you can do to make this less complex is just set these at rows of 2%. Look at these. Don't let all this suddenly throw you off. This is where we are right now. If price moves 2% lower, how much would you make? $33, $79, $129, $185, $239. Each day that goes by, you're going to make less and less and less money. So you need that move very quickly. It absolutely could go down to $300. And here's normally where I point out to people, in your trade, if it goes down to $300, which would be this one down here, today, you could make $239 with that. If you built your trade closer to the money, you could make $500 with that. So, it's not the idea that you can't make money with the spread that you built. It's the idea that you could make more money with less need of a move by building a better spread. Okay, bears in Canada, when you get into a trade, you should already have identified where you were getting out. When you were getting into the trade, you should have had a thought about how much you're looking to make or how much you're willing to risk before closing the trade out. Calendar trades are a little bit tricky, but I like using them. When you get into a calendar, it all comes down to the implied volatility. As the implied volatility expands, your opportunity to make more money, even from being less right, presents itself. But notice that the implied volatility is going down. That narrows your window, makes it harder to be right. So if you had a strike, for an example, at 109 and the implied volatility rose 10 points, you could be wrong by $5 and still be profitable, right? But as the implied volatility goes lower, you need to be closer and closer and closer to that actual strike that you picked. You say you have the 105. This looks like it's in a breakout, which could just be a breakout fake out, but either way, it's breaking out of the price shelf that it's in. The higher it goes, the lower the implied volatility would go, because that's what we anticipate. It's moving away from your position. Now, this could fake out, break out, and come right back in and move towards your 105. But the implied volatility is working against you, and price is working against you. So you need to make a decision. Does this have an opportunity to get back to that 105? Yes, it does have that opportunity. This could be nothing more than a fake out breakout. It validated this range twice before. Test and fail, test and fail. You could have another failure here, but it doesn't have to fail. It's been setting this line here with these higher lows. So this is forming a compression. This could be where it breaks the compression and rips to the moon. So you need to decide for yourself if this has got any chance of coming back towards this 105 before you run out of time. If you think it does, stay in the trade. 4 days? It could. So Maria, when it comes to building debit spreads and credit spreads, it all comes down to how long you're looking to stay in the trade, what your target distance is, and how long you think it's going to take to reach that distance. Everything comes down to the strategy that you want to trade. Are you trading an intra-week strategy? Are you trading a 30-day strategy? So I've done videos on kind of getting some grasp of which strikes you should use. I've even done videos on how you can build all 3 trades and decide for yourself which one is better to use for your particular goal. So in the video, I built a spread in the money, at the money, out of the money, 5 days out, 10 days out, and then I went 30 days out, did it again, building one out of the money, in the money, at the money, and I compared all 6 of those trades and said if the market moves $2 or $5, this is how much you could make for this trade or this trade or this trade. None of those 3 are wrong, but one is going to pay you better than the other 2 would. So how far do you think Boeing is going to go? How long are you willing to be in the trade? How long do you think it's going to take to get there? And then build your trade accordingly. Otherwise, looking at your question and trying to figure out how I'm supposed to answer that, I don't know how long you want to be in the trade. I don't know how long you think it's going to take for the trade to go the distance that you anticipate it's going to go. There's no rubber stamp answer for options. Notice that every time Boeing got to this institutional level, it validated the range. Even with all of this weakness, with the dividend and everything else, it still came up off of these lows. Yes, this thing could go to 300 like you were talking about earlier, but this thing is loaded with institutional investors. Don't forget that debit spreads lose more than any other options trade that you could build. From the CBOE website, when it comes to directional trading, debit spreads lose most. 2022. My opinion on leap trades is that they are the worst thing you could ever do with an option. Absolutely horrible, horrible, horrible trade idea. And it doesn't matter what product you want to put it on, leaps suck. Any trade that you would want to do in 2022, you could do in 2020, less than 100 days out. If you go to NIO and you look at the options in there, the only thing that this thing can do is lose money. Now, the closer you get to the front here with the implied volatility, the lower implied volatility typically goes, right? Because if you think about throwing darts at a dartboard, the closer you are to the dartboard, the easier it is to hit your target. And when you're farther out, the harder it is. Same thing with people who are looking to put money in the market. They're not quite sure what's going to happen 2 years out, but they're more sure of what's going to happen in the next 4 months. So the implied volatility is typically lower closer to the front and higher farther out. I don't know why this has a 91 implied volatility. It doesn't make any sense. It's not right. But I've talked about second tiered and third tiered Greeks. Your delta way out here isn't real. The only thing that will move this is implied volatility and the amount of market participants. So when a trading firm comes in here and sells 12,000 NIO calls, it dumps the price. And suddenly your trade will lose 5% or 10% of its value in the blink of an eye. And you'll be thinking, what happened? Price didn't move. Why did my option suddenly lose 10% of its value all of a sudden? Because supply and demand. So as the implied volatility normally goes lower, that's sucking the value out of your trade. And then supply and demand sucks the value out of your trade. And unless you get a massive, massive, massive major move, these options aren't going to gain in value. As an investment, putting a trade on in NIO, looking for, an investment opportunity, I don't see anything wrong with that. I have heard that this is, quote, the new Tesla or whatever. There's all kinds of wonderful advertisements for all kinds of products. The next Amazon, the next Tesla, the next whatever. If you think that this is an investment opportunity, cool. But that leap option is a waste of your money. It's a waste of your buying power, and you can do so much better moving forward into something that's actually going to make you money. So give me just a moment, everybody. I'm going to jump over to the YouTube. All right, everybody. I'm going to shut it down here on the YouTube. If you have not yet taken the opportunity, come by the Bullish Bears website. Join. It's 14 days free. Take a look around. Perhaps join the conversation. We look forward to seeing you there.